You heard there what the Fed Vice Chair had to say. Are you convinced by it?
Thank you so much for having me. And yes, at NFX, which stands for Network Effects on the board, we are believers in network effects. As a creator of DM, I'm a believer in stablecoins. So hearing Michael Barr acknowledge stablecoins in that way, I'm trying to stay net optimistic, but I am admittedly a bit nervous that oversight could maybe go too far. I don't necessarily see network effects and these assets taking off quickly as a bad thing, which definitely feels like he's coming at it with a negative tone.
And of course, that was the ultimate demise of DM when it had to sell itself. I have to say, it ended up selling itself to the likes of Silvergate Bank in and of itself, some of the assets, because they had to be, it went on into unwind because ultimately they didn't feel the regulatory environment was ready for that. What are you hoping to hear from regulators that they do indeed recognize ultimately the importance of stablecoins? Because you've written an essay on this.
I did write an essay on this. Thank you for reading it or commenting on it. I'm hoping to hear that the US government recognizes that stablecoins are a huge asset. So dollarization is an effort that the US government has been trying to push for over 200 years, and not necessarily in scalable ways. Like the US government to this day backs up physical trucks of cash into villages around the world. If you believe that the future of money is more digital than it is physical, stablecoins are a real tool to further push dollarization, which as an American is pretty awesome. And not all stablecoins are created equally. I've said there's 50 shades of stablecoins, but there are what we coined as safe stablecoins, which we define as assets with digital representations of actual dollars. So let's say a safe digital US dollar has a physical US dollar in a bank account somewhere. And the US government should see that as a great tool. So I'm hoping that the US government realizes that stablecoins are really not an issue or a matter of crypto first. It's really an issue and matter of dollarization and US hegemony first.
Yeah.
Financial services second, and crypto is just kind of the infrastructure on which it's built.
But when you hear, of course, Barr saying they scale quickly due to network effects, and he warned that therefore if they go unchecked, ultimately there's a risk there, a tremendous risk. Is the risk really ultimately for him that, well, it gets bigger than non-digital cryptocurrencies?
I just want to shake him. If he's listening, I'd love to shake you. So
we'll message him.
The risk, yes, thank you. The risk, where I will admit and see a risk, is that there are 50 shades of stablecoins, as I mentioned, and they're not all, quote, safe, in that people are using the 3 letters USD and tacking it on to various assets, which could be misleading to consumers. And the onus is on the consumer to do the homework on their own to decide if this version of digital USD is safe, is this one not, et cetera. But if they are regulated, for which there are some issuers, for which there are actual physical dollars, like at least one in a bank account for every digital version, like if that takes off quickly, that could be a good thing. Like again, the US government has been trying to push dollar hegemony for 200 years and not quick and scalable ways. And this could really, really be a great tool for that.
Morgan, DM, the association's assets sold to Silvergate. You were co-founder of DM. What is your reaction to what you're seeing happen with Silvergate?
It's all kind of disbelief. So I was not at DM I left right around when that sale was being negotiated, so I wasn't there for that. But I will say that even though DM did not take off or succeed in the ways that we had hoped and dreamed, I was excited to see the assets live on, with the hope that another entity, not Facebook, would potentially help bring these ideas to life. So it is a bummer to see that not be the case with Silvergate. But
yes,
we're a great partner at the time, and we were happy to find the home. But it's all kind of surreal.
Morgan, we have to ask as well, the other big piece of breaking news is SVB Financial, Silicon Valley Bank. Are you a deposit client of that bank? We're showing a chart on the screen, biggest drop on record this Thursday.
I have a friend visiting who got to the office today and was like, you didn't tell me the sky would be falling. And I thought he was referencing it raining in San Francisco, but he was referencing Silicon Valley Bank. So definitely still in shock and awe there. NFX is a client of SVB. To be honest, they've been a great partner to us, as they've been a great partner to everyone else in Silicon Valley and the broader tech world. And they've really been a pillar of industry in a really positive way to date. So this is deeply upsetting to see. We don't know much. We're watching it like everyone else is watching it. And as information unfolds, advising both the portfolio and ourselves accordingly. But
Morgan, will you have to ultimately advise your portfolio clients, even if they are a great partner, to sever their links to pull their deposits?
No, that's like the multi-billion-dollar question of the day. If we do feel that it is unsafe and puts our companies at risk, we will do so, but
what would be the tell for that? What would be the signal that you then think it's unsafe?
The biggest question that we're asking is how will this impact our portfolio companies from operating their businesses in the day-to-day? And I don't think we're worried about everything vanishing, overnight, but we are worried about our companies being able to access working capital that they need to run their businesses today, tomorrow, and over the next few months. So it's unclear exactly what the objective sign is that we are looking for, but that's kind of the question we're looking to answer.